It's the earnings season that we are heading into, and some veteran advice would always be useful. Let's welcome our market master for the day, Krishna Kumar Karwa, Managing Director of Emkay Global Financial Services, joins us. Good morning, Mr. Karwa. Thank you very much.
Good morning.
For joining in. Well, we are flirting with near all-time highs. If you just deduct the bank nifty, the markets have been doing very well. But do they have the spunk? Do they have the verve to go beyond the 9,000 mark with Elan? Is there enough encouragement in the earnings numbers?
See, honestly speaking, as far as the Q4 earnings that you are asking, then I mean, there is not much of an expectations broadly from most of the corporates in terms of the Q4 earnings. So the rally that we have been seeing of late is more a function about expectations about things improving maybe in the second half of the year. And in anticipation of that, there have been robust FII inflows and domestic inflows which we have seen, and that's the reason why the stocks are. So to answer your question, whether the rally can continue further because of earnings, I think it's no. But more than that, I think it's going to be the expectations, the positive sentiment which is important.
Mr. Karwa, good morning. On that note, actually, the sentiment has been positive because of a lot of macro improvements and work that is done by the government on the ground in the last couple of months. Purely based on that trigger, do you think this market can take out new highs before the first half of the year is out?
Possible. You have to also look at it from the perspective that India is underinvested as far as equity investments are concerned. And earlier investors, the domestic investors specifically had alternate investment opportunities where they were making good returns, whether it was gold, whether it was real estate, whether it was fixed income. Going forward, currently the way it stands, I think equity seems to be the best opportunity for investors to be invested in. And the momentum has got created. No doubt ground realities take time to improve, but Indian investors want a piece of the action as far as equities are concerned. So if you continue to see inflows, then there is no reason why we should not be able to make new highs. But to sustain that, obviously you require good corporate performance to support the improving valuations. As far as FIs are concerned, I think they are also very positive on India, and amongst the emerging markets, probably we are in a sweet spot. And most of the global markets also seem to be doing well. So we are also benefiting from increased global liquidity.
In your assessment, this global liquidity, which is at least partly driving the rally, is intact? One shouldn't worry too much about that liquidity now?
So honestly speaking, what is important is finally, as you initially said, is the valuations part of the which is most important from an investor's perspective. And liquidity, yes, currently it is very strong, and hopefully it should continue to remain strong. But investors need to balance out between the liquidity-driven rally and where you believe that maybe valuations are getting overstretched. So currently I believe that, yes, we are being supported by liquidity, global liquidity supporting us. But valuations are moving up, but are they in a stratospheric zone or are they totally out of whack? I don't think so.
Where do you still see pockets of undervaluation? Any specific sectors, anything that you can give us by way of hint, since you won't point out to specific stocks to us?
Yes, I mean, if you look at the way your financial services sector, which is almost 27-28% of your Nifty weight, within that you have a total disconnect between the private sector banks and the public sector banks for obvious reasons. But having said that, if you believe that the economy is going to improve and the question of bad assets, etc., will get resolved over a period of time, then public sector banks do offer you deep value for a long-term investor. So that's one total segment which market currently is ignoring for obvious reasons. I don't know whether it will take a few more quarters for things to improve or whether it could be a longer time frame. But from an investor perspective, I mean, there is a deep value over there. Then if you look at the way your two-wheelers, the valuations of many of the stocks in that segment, again the valuations seems to be, there has been some slowdown in performance and that's the reason why valuations are where they are. But from a longer term perspective, that whole segment possibly offers you a good investment opportunity. So I think there are opportunities like that. You have your oil marketing companies, they are benefiting because of lower crude oil prices and absence of subsidies, etc., plus improving GRM margins. But valuations wise, I think they still offer you opportunities for good appreciation from current levels. So I think there are pockets which where investors will find opportunity to invest from a medium-term perspective. Momentum stocks, obviously, they are slightly overvalued and they continue to drive the momentum.
Okay. So you mentioned two-wheeler